So today is a class where we're going to understand introduction to capital budgeting. And this chapter is a very important in terms of the examination. Like you're definitely going to get a different type of the questions from this particular chapter. So before to understand, we have to understand a basic concepts, and that's why I'm here for you. Okay. So let's start today's session. Before to start, I would like to say if you have not downloaded the Adda 247 application, download and subscribe the Officers Adda 247 YouTube channel so that you can get the regular update. Okay. So let's start today's session. So before to start, I would also like to say, our target batch is started. And in this target batch, PPB and LRB classes is already started, and your AB class that is going to start from the 4th of April. So, this is a very right opportunity that I think you should all just grab this opportunity. Like you are getting everything at very convenient price. Okay. And the important key highlights, if I say, of this target batch, that you will get the multiple mock test, you are going to get the multiple ebooks, you are going to get a 130 hours live classes where you can directly interact with us. Okay. And the main feature that you just do not need to make any study plan, because as a banker we have a very hectic schedule. Okay. So you just do not need to make any study plan, you just do not need to make any time management for studying. Okay. We all are here for you, and this would be fully exam oriented class, because if I say, like in my batch, I will explain everything that based on the previous year memory based question. So this is a perfect pack. Like I think that you should enroll in our batches. Okay. So and just apply the code, that is Y422, and you are going to get a big discount on that. Okay. So you have to use only the code, that is Y422, and with this you are going to get a big discount. So I think this is a very right opportunity, and I think you should all just grab this opportunity. Okay. So now let's start today's session about introduction to capital budgeting. Okay. And I hope everyone has just joined us. So like this video and share this video to your friends so that maximum number of our colleagues and friends can join with this session. Okay. So now let's understand what we understand by the introduction to capital budgeting. Okay. So let's understand. So for understanding of the capital budgeting, the first thing we have to understand about money and the relationship between the money with to the time. Okay. So for understanding the capital budgeting, we have to understand what is the relationship between the money and the time. For that, we have to understand a very important concept, that is money has the time value. All right. So we have to understand that. So we just do not focus on the definitions and all. We are directly understanding with the example. All right. So suppose that this is you, and your name, suppose that is A. So this is basically you, and this is your friend whose name is B, and this is your friend. So suppose that your friend is just borrowed a sum or say any amount from you. Let's say, suppose that your friend just borrowed 1000 rupees from you. Okay. And you just gave to your friend like 1000 rupees your friend is asking. So you just gave to your friend, and after 2 years your friend just returned back the same amount to you, like 1000 rupees after 2 years. Okay. So what you are just going to say to your friend, like, you just made loss to me, you just made loss to me. And why you are saying to your friend that he just made loss to you? Because if you invested in any bank FD, so suppose that if you are going to invest in any bank FD, then definitely you are going to get more amount than the 1000 rupees. Definitely you are going to get. That means your friend just made loss to you. That's it. This is known as the money has the time value, but if it is invested, in the correct way, right? Correct. If we are talking about for the company, then we are going to say if it is invested in the correct, correct project, okay, right project. So that is basically we have to understand in the capital budgeting. Okay. So now when we talking about any company, and company is having a different type of the projects. Like suppose that if we are talking about, like, this is a company which is named as the XYZ Limited. Okay. And suppose that company is having a different type of the proposals, like proposals of the project. Okay. So this is a project A and this is a project B. So now the company just want to know that what project company have to choose, okay, for investment purpose, right? So it may be anything, like it may be just, if I say, like, if it may be just buying any kind of the land for rent purposes, it may be anything. Okay. So this would be a project A and this would be a project B. So suppose that, and this is proposals, this is only proposals, and the company just have to choose only one project, right? So the suppose that company is investing 100 rupees in the project A, and from that company is going to receive 105 rupees. And suppose that in project B company is investing in the same rupees, like 100, and from that company is going to receive, suppose that 150 rupees. Okay. So if I say what project or say with what project company should go, so definitely company will go with the project B, because here expected rate of return is greater than the expected rate of return from the project A. So that is basically we are going to understand in the capital budgeting. That's why in accounting a capital budgeting chapter is introduced. Okay. So I hope from that now the understanding related to capital budgeting is just clear for everyone. Okay, right? So company is having a different type of the proposal, so it becomes so necessary that funding of the company or investing of company infuse in the right project. So as an investor, if I'm talking about any investor, right? So as an investor, the investor will be concerned with how much income generation will be in the future. Like investor, what investor think, like investors always concerned like with how much income generate will be in the future. So that's all you are going to understand in the capital busting. And for calculating that, there are different type of the methods that you are going to understand in this chapter. Okay. I hope it is understandable. Okay. Now we are going to understand a very important term, that is cash inflows and cash outflows, right? So first understand what we understand by the cash flows. So as it names itself imply, like cash flow, it just refers to the movement, and movement of what? Movement of the money, movement of the money into business and out of the business. So that cash flows is basically the movement of any money into the business or out of the business. So that is basically known as the cash flows, and it is kind of the two, like cash inflows and cash outflows. So basically cash inflows, that actually refers to all such activities that result in the business getting cash coming into the business. Okay. So cash inflow, what we understand by the cash inflow, that refers to, if I say, that refers to all such activities of the business that result getting cash into the business. And what we understand by the cash outflow. So that activity of the business that results like cash is going out from the business. Okay, so that is known as a cash outflow and that is known as a cash inflow, right? So whenever we are talking about cash outflow, that is basically known as any kind of the investment of any company. So that is known as, or say that is a one of the example of the cash outflow. And what we understand by the cash inflow? So suppose that, let's understand with the example because that is very important to understand. So suppose that any company just purchase a land, okay, and the purchase the land for what? For rent purpose, for rent purposes. So a company purchased the land for the rent purposes, right? So currently, if I say like company purchased this land for the 40 lakhs rupees, so that 40 lakhs rupees company for 40 lakhs rupees companies purchase this land. That means that will understand as an investment for a company, and also that would be understand as a cash outflow because that 40 lakh rupees actually just going out from the business. Okay, and suppose that for rent purposes, if I say like from this land company is going to get a money like in future. Okay, so suppose that from this land a company is going to receive a money, suppose that 50,000 rupees per month, right? For the first month 50,000, for the second month 50,000, for the third month 50,000. So that's how company is going to receive a money. So that is known as the company's future cash inflows. All right. So what we understand by the cash flows now, I think everyone is so much understand this. So that is basically known as the cash inflows. That is basically known as the cash inflows. Okay, I hope it is understandable for everyone, right? Now now there are different methods that you have to understand, like the one of the like we just discussed in the next slide. Okay, so I hope it is clearly understandable for everyone. All right, uh, everyone clear about that? Like anybody having any confusion in this? Like cash inflow, what we understand by the cash inflow, like suppose that a company so suppose that, because this is a very important concept, that's why I am just focusing on that. So suppose that company is just purchased this land for the 40 lakh rupees. So that 40 lakh rupees is the company's cash outflow. Okay, so that is 40 lakh rupees. And one of the important thing I would like to say, when we are just going to solve net present value method, so where cash outflow, the present investment method, we generally consider with the negative figure because this is actually the money that is going out from the business, right? And whatever the cash inflow that is going to receive in the future, so that is known as a cash inflow. All right. Now, from the exam point of view, there are different methods for this, and we are going to understand the first method, that is the net present value method. So the first method, this is the net present value method. Second method, that is your IRR, which is also known as the internal rate of return method. All right, and another method, that is payback method. Okay, so whenever a company having a different type of the proposals of the project, suppose that project A, B, C, D, all right, and company is just confused like which project should be chosen. Okay, so from for that, for choosing the correct project, like for getting the expected rate of return higher in any kind of the project, so a company go with that project. Okay, and for that there are three methods that is important from your exam point of view. So first, that is net present value method. Another is the internal rate of return method. and the third one is a payback method. That's all are very important for the exam point of view. Okay. Now, the one more thing that I actually explained you in the previous lectures, like, you have to understand the relationship between the present value and future value. And this relationship will be actually useful in the chapter of the Vitium, in the chapter of this like capital budgeting, all right, as well as in the chapter of the where you just understand the annuities. Okay, so for that, the this relationship is going to be very useful, so I think everyone has just memorized this. Okay, so what the relationship between the present value and the future value? So like I explained, that is future value is equal to the present value, and it would be multiplied by the 1 plus r to the power n. So that is known as the relationship between the future value and the present value. Okay, so now here I'm going to tell you very important thing. So that is actually your relationship between the future value and the present value. Okay, so the important thing that you have to understand, this r is actually known as your discount rate. This is known as the discount rate. And the one important thing that is discount factor. Is there anyone who can tell me what will be relationship between the discount factor and the discount rate? Or you can also tell me what we understand by the discount factor. Is there anyone who can just know that? So just tell me what we understand, what the relationship between the discount factor as well as the discount rate. All right. So most of our colleagues actually confuse between the discount rate and discount factor in the examination, and this is known as a discount rate. So whenever we are talking about 1 plus r in terms of the whenever we are going to solve the questions in the capital budgeting, okay, so this r is actually known as a discount rate, and the discount factor and the discount rate, the relationship between that it will be equal to the 1 plus r to the power n. This is known as a discount factor and discount rate, relationship between the discount factor and the discount rate, and this is most important thing to understand. Okay, I hope it is understandable. Okay. So now whenever we are talking about, like, we can also write this value, present value will be equal to the future value, and it would be divided by the 1 plus r to the power n. So this also can be write as like future value, and it would be multiplied by the discount factor. And one question definitely asked from this particular formula. So that is a very important thing to understand. So you can get like questions related to, suppose that the formula that may be asked. Suppose that any question that of the 2 marks, like the discount factor, discount rate, that's all are given, and you have to calculate the present value. So then you have to know how you can just determine the value. Okay, so that is the most important thing to understand. So I hope it is understandable, so everyone. So in the examination, like, we just confused between the discount factor and the discount rate. Suppose that discount factor is giving, and we just think that this is the same as a discount rate, but it's nothing. Okay, so the discount factor, that is equal to the 1 divided by 1 plus r to the power n, where n just denote the number of the periods. Okay, so that is the formula. Now the next thing that we are actually covering the net present value method, and we actually just briefly understand this net present value method. Rest we are going to understand in the next lecture. Okay, so what we understand by the net present value method, and this is also known as the NPV method. Okay, and in the examination you are going to get, definitely you are going to get the questions related to this, like where you have to calculate the net present value. But that means that project should be acceptable or rejectable. Okay, so where you have to decide in terms of the net present value method. You are going to get questions related to IRR. Okay, like IRR questions, like you are going to get questions from the IRR method. That is mostly you are going to get theoretical questions. Okay, most of the questions you are going to get from the NPV and the payback method, while from the IRR you're going to get some theoretical questions, because that method is actually complicated. Okay, so we understand everything, do not worry about that. So net present value method, we actually compare the in the net present value method, we actually compare the present value. And what present value? That present value of all future cash inflows. Like, just understand with the example. So suppose that I explained in the previous slide, like if any company purchased a land of 4 lakh rupees, sorry, 40 lakh rupees. Okay, so that is the that is the investment of the company. And suppose that from this land a company is going to receive a income, like monthly income, that is 50,000 rupees, that is 50,000 rupees, that is 50,000 rupees, that is 50,000 rupees. All right, so that is basically known as the future cash inflow. What we understand by this, that is known as the future cash inflows. And in the net present value method, we actually calculate the present value of the future cash inflow. That means what we are going to receive in the future, we just convert into the present value. Like, to understanding, like comparing the present value of the future cash inflow of the investment with the cash outlay, or say with the cash outflow. So that is your net present value method. And the formula of this, like, it is quite simple to understand now. That is net present value is equal to the minus investment, or say cash outflow, and present value of all future cash inflows. So this is your net present value method. Okay, now in tomorrow's session we just understand in the detail, like what the net present value method, and how to solve the questions based on that. Okay. Okay, so that's all for this session. I hope this session is useful for everyone. And now I'm just going to show you how you can enroll in our target batch. And I'm just hoping that everyone is going to clear your examination in this upcoming session of the JIB, which is just going to conduct by the IIBF. Okay, so what you have to do for enrolling in the batches, that I'm going to show you, that I'm going to explain you. Okay, so what you have to do, you have to just go to Adda 247 website, and after that you have to go to the JIB CIB, where you are going to get everything. Okay, like you can enroll in the JAP product, you can enroll in the CAP product. Okay, so in the JIB, you will get a multiple batches that actually are running, and you can choose any of the batch. Okay, so like you can also enroll in any individual batch. So here you can like if I'm talking about any target batch. Okay, so you have to just click on this. After that you are going to get like details, like what the time is, what the study plan would be, like PPB, AB, LRB, and what are the different type of things that you are going to get in this batch. Okay, after that you have to just here, and you have to go to the buy now section. After that you have to just fill some details, and you have to use the code, that is the Y422. Like I think it is visible for everyone. So you have to use the code, that is Y422, and with this code you are going to get a maximum discount. Like you just see that currently 77% off is going on. So you can just grab this. Okay, and this is now at very convenient price. Like, so I hope it is understandable for everyone. So this is how you can enroll in any batch of the JAB and CAP. Okay, and once again I'm saying that I'm just hoping that everyone is just going to clear your examination of the JIB CIB. Okay, so now I just want to say that thanks for watching me here, thanks for joining me here, and thanks for for your appreciation, like you just daily you just give to me. Okay, so like this video and share this video to your friends so that maximum number of our colleagues can join with us. Now we will meet on the tomorrow at the same time. Okay, so thanks for once again, thanks for watching me.